Now we move into section 3.2. The key idea is that job order costing is based on tracing direct costs and allocating indirect costs. Direct materials and direct labor are traced to a specific job using source documents. Overhead is allocated using a predetermined overhead rate based on a cost driver. Direct materials are tracked using a materials request form, sometimes called materials requisition. This document shows the amount of material moved from raw material storage into production. Once materials are used, their cost is moved from raw material inventory to work in process for the specific job. Direct labor is tracked using time cards. Employees record the start and stop time worked on each job. Direct labor cost is calculated as hours worked multiplied by the hourly wage rate. This cost is traced directly into the work in process account for each job. Now we discuss overhead. Overhead includes indirect production costs, such as factory utilities, depreciation, factory supervisor salaries, and indirect materials. Because overhead cannot be traced to one specific job, it must be allocated. Companies apply overhead using a predetermined overhead rate. The rate is computed as estimated annual overhead divided by estimated annual activity in the cost driver, often direct labor hours. Once the rate is determined, overhead is applied to jobs by multiplying the rate by actual activity. Now we will match information to the source document where it can be found. The source documents include invoices, purchase orders, materials requisition forms, and time cards. For example, vendor charges are found on an invoice. The agreed purchase price is typically on the purchase order. Material issued to production is found on the materials requisition form. Start and stop time worked is found on the time card. Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 3. Now we calculate the predetermined overhead rate. J.D. Company estimates 20,000 direct labor hours and $200,000 in annual manufacturing overhead costs. The predetermined overhead rate is calculated as estimated overhead divided by estimated direct labor hours. Pause here and work through the activity. Once you've finished, check your answers with the solutions provided in the back of Chapter 3.